Thank you for joining. It's a pleasure to have you here. So over the last 3 years, the markets have been in a roller coaster. What is something that the markets have taught you that you've learned over the last 3 years?
Yeah, I think one really important lesson from the last 3 years is that when new transformative technologies come along, like we've seen with the artificial intelligence boom, investors really tend to underestimate exponential growth.
Right.
And so why is that? Like as humans, I think we tend to think in linear processes. Like, if you walk 10 steps, you go about 10 meters. If you walk 100 steps, you go 100 meters. And so when we're confronted with an exponential process, we tend to really underestimate that, and that can create pretty big forecasting errors. And that's pretty significant for financial markets for a couple of reasons. Number one, when these technologies emerge, they tend to look linear at the beginning. And so we tend to forget that exponential growth can really compound over time. And number two, like traditional financial models are really built for a linear world. So if you look at just a simple valuation model like price earnings or whatever, it really can't capture exponential growth in earnings for a company. And so we think when these new disruptive trends come out, investors can really tend to underestimate the trend by 30 to 40%, sometimes much more. And to give you an example, like we think with the emergence of the artificial intelligence boom, we think we're in the early innings of this GPU-based compute cycle for AI applications that could go on for a number of years and really see upwards of $10 trillion invested. And so if you look back 3 years, just as an example, look at NVIDIA. 3 years ago, the consensus expectation for their current year revenues, which runs through January of 2026, was $46 billion of revenues. The current consensus expectation for that number is over $200 billion. So it's a magnitude of more than 4 times underestimated. And so the real lesson when we look at exponential growth is if you think a stock is cheap, like NVIDIA traded at 40 times earnings 3 years ago, when in reality, or you think a stock was expensive because it traded at 40 times earnings, in reality it was very cheap.
Wow, I agree with you 100%. So how do you manage long-term strategy while dealing with short-term volatility?
Yeah, it's a really good question. I think particularly with technology investing, it is important to think about the long term. It's important to be able to sort of do what we can to try and capture this exponential growth and these disruptive trends. And so how we balance that is, number one, I think it's important to differentiate between short-term volatility and true risk. In our view, we should be willing to accept some short-term volatility in order to generate a good return for our investors. Short-term volatility to me isn't risk. Risk is really the chances of a true loss of your capital. So when we look at being willing to accept that risk, we can also manage some of the short-term volatility as well. And we do that through how we manage the portfolio. So our portfolio management process is much more than just stock selection. We're looking at total risk management for the portfolio, things like that. But to a certain extent, we can't be afraid of some risk, particularly when going through these long-term trends, because we know that some of these stocks will sell off quite a bit over time. We've seen 30, 40, 50% drawdowns in some of these names, and we really view that as an opportunity. And I think it's important as a long-term investor to be willing to accept some of that to some extent, manage the total risk of the portfolio around that, and then really capture the growth.
Perfect. That is excellent. So one final question. How does being recognized at the Lipper Fund Awards, what does it mean for you and your team?
I think it means a lot to us, a lot to the team. I think it recognizes the strength of our team. And so one thing we like to tell our investors is that we do manage our portfolios as a team. There's not one single decision maker. And so it really shows the strength of our team, everyone's inputs into that process, the benefits of collaboration, hearing different ideas on different topics. But I think it also shows the benefits. It recognizes our process. We do think about more than just stock selection. As I mentioned, we think about total portfolio management. We think about balancing risks in the portfolio. We think about allocating capital amongst different factors, for example, balancing value versus growth versus quality. So we think about that, and I think being recognized with an award that factors in not just a good return, but also a risk-adjusted return, consistency of those returns, it means a lot to us. It means a lot to the team. Again, I say we have a great team, and I think we have a great process, and it's great to be recognized for that.
Perfect. Absolutely. It's a pleasure to have you, Mike, and we look forward to seeing you at the Lipper Canadian Fund Awards.
Thank you for having me.
Absolutely.